Welcome to the Battle Buddy Podcast with Keith McKeever.
Welcome back to another episode of the Battle Buddy Podcast. I have Dave Pere with me. We are going to talk about real estate. So if you are looking to buy a home, sell a home, anything in real estate, this is the conversation that you want to tune into for sure. Got some good questions. But before we get started, Dave, welcome to the show.
Thanks for having me, Keith.
Hey, man, it's awesome to have you on here. I get excited anytime I can talk about real estate because that's my career of choice. And then between that and the Battle Buddy Podcast, this is awesome. This is the best of both worlds for me. So before we get started, though, why don't you just tell us a little bit about yourself? Who was young David? How'd you get in the military? What'd you do? Share a little bit of your backstory.
Yeah, so the backstory, I was a homeschooled kind of sheltered kid in Arkansas, wanted to leave Arkansas. So, I didn't have money for school, didn't like school, was trying to figure out what to do. Was like, oh, maybe I'll be a firefighter or a cop. Well, that doesn't get me out of Arkansas. And then one day I ran into a Marine recruiter and all the other recruiters. But I was like, man, these guys look cool and they've all traveled the world. That'll be a great way out. Let's do it. And then the plan was 4 years and, go to school. And then I got done with 4 years and was like, man, I still don't want to go to school. And I had a lot of fun. Let's do this again. And then, it progressively got less fun. And as I got promoted to more and more desks and less, guns and whatever. But in 2015, I, read that magical Rich Dad, Poor Dad book, got started in real estate. And I was able to exit the Marine Corps after 13 years active duty last October. And I guess if I ever take a W-2 again, it'll be because I felt like it. There's no need. I'm able to do my own thing, run my own businesses, and it's been fun so far.
Absolutely. You know what? I feel the same way. It'd be really hard to go work for somebody else when you work for yourself. The only people you have to answer to are your clients, point blank.
Yeah.
And yourself, I guess. But so why, what was it about the book that kind of spurred you to get into real estate?
Yeah, that's a good question. I don't know that I've ever really thought about specifically if there was a piece that stuck out. It's just Robert does a really good job of taking a pretty boring topic, money, and making it very understandable and very kind of exciting enough that you're like, oh, maybe I'll go read another book and learn some more stuff. And then eventually it becomes a hobby and you're like, wow, this is awesome. I'm going to do more of this. But I think it was really just the simplicity of the book and, the idea that if you buy a rental, it starts paying you, then you buy another rental, it starts paying you. And then eventually you've got, 10, 20, 30, 100 rentals and they're paying you enough that cool, whatever. I can just go and do this, or I can go and do that, I don't know. It seemed like a win-win. I did some research. I ended up buying a duplex and I was living in one half and renting the other. And I went from paying $550 a month for a 2-bed, 1-bath apartment to, I think I was out of pocket $185 a month or $150 a month or something like that to own a 2-bed, 1-bath duplex. Then when I moved out, the duplex started paying me. And I was like, wow, this is cool. And then
not a bad setup, right?
Yeah. And then from there, it just kept going. I mean, it was one thing after the next. I mean, it took a long time to, I think it was 2 years before my second actual investment property. So it's not like it was a quick start, but it gained speed. Now we're in March and we've done completed 6 transactions, 4 houses currently under renovation and another one under contract. So we'll have, by the end of March, we'll have 12 purchases and or assignments done. So, we're moving.
That's awesome. And the duplex way, I've said for a while, that's a great way for veterans to go, especially if you're young and single, maybe you don't have any kids. It's probably an ideal setup for that. If you're married, you got kids, the spouse may put their foot down a little bit and say, we don't want to live with people right next to us, but it's not a bad way to go for a year or two, at least. Yeah. And like you said, you're out of pocket 100 and 150, 180 bucks. That's incredible.
Yeah. And when we say that, people think immediately, I can already hear the people listening to the show who are like, well, that won't work in my market. It's too expensive. And so I'm just going to stop that and just real quickly say that I've seen this work with duplexes, triplexes, and fourplexes in Hawaii, San Diego, LA. I introduced a guy to my roommate at the time was a VA lender. And I was like, yo, this dude wants to do something crazy. Can you help him? And I kid you not, $1.93 million duplex, active duty major, 0 down in Venice Beach, like right across the street from Muscle Beach, like beautiful location. And yeah, he's still paying out of pocket to live in that one. That one's a little extreme, but
how much you pay out of pocket is going to vary a little bit, but you can offset a good portion of your mortgage by doing it.
And he's not using all his BAH, which I would consider a win, because to live in, near Santa Monica, like he would have been out of pocket way more than his BAH if he just rented, let alone buy. And so, and I've seen people do $1 million fourplexes where they're cash flowing. But you're right. Yeah, it's definitely an easier sell if you're single or if you've got a small family. There's some ways to do it, but the bigger my wife would never, I think that would be a losing battle at this point in my life. Like, hey babe, let's move into a fourplex, instead of the 10 acres we have right here.
I know without a doubt I would get the same answer from my wife.
Yeah.
No way. Even if I pitched this, do it for a year or two, but it's
root beer, by the way.
Oh, guys. Good, since you're sitting in your car.
I walked out to my car because we're doing the show here because the internet's out of my place, and my father-in-law's helping put siding up on the house, and he was like, "Oh, is that a good one? Like the good stuff?" I was like, "Nah, root beer." He's like, oh, "Okay, I won't be mad at you for not bringing me one then." Like, all right.
That is a good root beer though. So, yeah. But getting started in real estate, what direction did you go, after seeing that, you can offset a lot of your mortgage? What area of real estate did you focus your attention on?
Yeah. I'm kind of an oddball. I will tell people that I am a buy and hold investor, and they usually follow that up with, "Oh, awesome. What niche?" And it's like, no, I didn't niche that down. I will hold long-term rentals. I've got a short-term rental. I've got a hotel. I've got apartments. I've got single families, duplex, fourplex. Don't have a triplex yet. Got to add that to the little collection. Just sold a 10-unit apartment. I have a 23 and a 15 currently in a 40-unit hotel. I'm also a partner on 2 big syndications, one of which we just closed last week, 670 doors. So that one's crazy. But I mean, really, I'm just kind of a cash flow guy. So like, if I can find a way to buy something with not a ton of money out of pocket that's going to produce cash, I'm all for it.
As pretty much everybody should be. You should be looking at every option, because you never know where that next deal is going to come from, what's going to make sense. Because I know on my side of things as a residential agent, sometimes something looks like a good deal, and then you dive into the numbers, with your investor client. It's like, no, it really doesn't make sense. It's not a good deal, or what doesn't look like it is. And then you find out, wow, actually they're charging higher rents than you expect, or the condition of the property is better on the inside. And now all of a sudden your rehab budget's gone down, whatever. And so you got to take the whole thing into consideration for sure. But that's investments. The same thing, I guess, with buying, a single family home, if that's what your goal is too, is to get out and use your VA loan. But what do you use as your best practices for searching for homes for the investment side?
Well, there's two ways to answer that. Before I started building my crazy company, it would have been, MLS, automatic notifications from agents, and get on every other wholesaler's list, right? Like, go and search, need to sell my house fast in your location, and then click on every single one of the wholesalers' websites and send them an email saying, hey, add me to your buyer's list, I'm interested. Or go to your local meetup, and because then you've got people bringing you deals. Now, I actually do some wholesaling. I don't like wholesaling. I just do a lot of off-market marketing, and we can't take them all down, right? Like, we've got 4 renovations going right now, which is great, but we've got 2 more under contract, and I can't take them both down with my current crew. So they either sit or I wholesale them to someone else and find another deal. And so we do some wholesaling, but I try to do a lot of burr and flipping. And so we are doing a ton of, direct mail, or we've got cold callers and some PPC, like pay-per-click advertising on Google, and then word of mouth. We've got some home buyers homeowners that we've bought. Like there's this lady that we've bought 2 properties from, and she owns 12 more free and clear. And she has, unfortunately she has cancer. So she's slowly looking to liquidate and, get rid of her portfolio. And so we're like, all right, well, we made these first 2 transactions super easy. Hopefully she comes back. And she actually called us last week, and we're going back and forth on whether we're going to buy a duplex from her or not. So, yeah.
What about like landlord networks? I know in my area, there's a few of them. People kind of know each other, kind of know what's in each other's portfolio to some degree. And I think sometimes deals get put together like that, where they might know, hey, you know what? I'm going to sell XYZ property. And you know what? I think Dave might be interested, and just put the deal right together.
Yeah, there's a couple. There's a Pints and Properties meetup. There's a RIA, Real Estate Investor Association, just in case somebody's listening doesn't know what that is.
There's a lot of acronyms in real estate. It's
just like the military.
Yeah.
And then, I've got my own little Facebook group that I'm working on growing. And so we're just kind of trying to improve that, get to the point where people look to us when they've got deals. But it's, I don't know. I mean, I haven't had a whole lot of luck personally from those kinds of markets. It seems like a lot of landlords, it's interesting because landlords will be like, oh man, I've got this great investment property. Let me go sell it to an investor. But I want full retail, plus some, because it's an investment. And it's like, it's not how this works. Like if you want to sell to an investor, it's got to be a discount. It's got to be a win-win. Otherwise, put it on the market, And so it's kind of an interesting, because it's like the investor wants top dollar, but they'll go and put it out in front of other investors who want to pay bottom dollar. It's like, this is a losing proposition.
There's a big gap in negotiations there.
Yeah, just list it on the market,
And it's, in this market, it's a little different. Maybe not for big multi-door units, but if you've got a single family home or a duplex or something like that, those are flying off the market quick. But in other markets, like 2 years ago, year and a half, 2 years ago, and before, you might have a property sit on the market for months. It just depends on what you got. And if you've got an investor and you can work out a deal, you can sell it a lot faster.
Yeah.
So there's you gotta look at all angles, but that's some good stuff on investing. And I highly encourage veterans to look into what they can do to invest in your area. Look at other areas. I know there's a lot of very affordable places across the country that you can look at. But the real power for veterans is using their VA loan. But before I want to get into that, I want to say, have a scroll at the bottom, plug for your podcast and your website. I know the podcast URL is you just add podcast behind that. It'll all be in the show notes for everybody. But how did that come about?
In 2018, so I was, and thank you for the plug. In 2018, I was looking to I thought I was going to write a book, and I haven't written this book ironically yet. I wrote another book, but when I was in Afghanistan, I kept like a mission log and a journal. And so I was like, if I correlate these, you could see like, on this day, David drove over an IED. Hey, here's how he was feeling that afternoon. And so I was like, man, this would make for a decent little book. Like there's like 97 missions or something like that. And, whatever. And I was like, man, all these SEALs write books, maybe who wants to hear? Let's write the story of like what a normal Marine went through, which was just a bunch of BS.
You'd have a good point about SEALs writing books. It's like the go-to thing once they leave service. So I gotta write a book now.
I'm telling you. And so I was like, nobody's going to listen to me because nobody knows who I am. So nobody's going to read my book. Right. And I don't have some crazy war story. So it's like, it would just be this thing that I wrote that I might as well have written for myself. Which,
you know what? There's power in that too.
Yeah, that's, there's nothing wrong with that, but that was kind of the catalyst. I had a friend coming over to have a dinner, and I was like, if you were me, what would you do to, work on growing this or whatever? And he was like, well, just start a blog. Like, I was like, oh, he's like, you'll learn how to write. People will reach out to you. You'll grow an audience, and then you'll have some place for when you do launch your book. I was like, okay, cool. Well, what the heck do I write about? He's like, I don't know, write about real estate. Like, there's not a whole lot of like military real estate investors. Just write about it. And so I started writing about, just documenting my journey. What was I learning? What was I buying? What was I doing? And lo and behold, there's actually quite a few people in the military interested in real estate. And so we now have the largest like military real estate investing community in the world, probably 200,000 followers across all platforms. And it's kind of crazy. So it's been cool. We get to help service members and vets learn about building wealth through real estate, personal finance, entrepreneurship.
That's what I love about it, because those are the same things that I'm into.
Yeah.
It's, personal. I don't know. I wouldn't consider myself an expert, but I kind of geek out on it. Like you said earlier, like sometimes real estate and personal finance is not the sexiest of topics in the world, but for some reason, some of us just really enjoy that stuff.
Yep.
we geek out on it. But I wonder if there's a correlation to people catching on to that, to the culture in the military. I know when I was in the Air Force, it was talked about pretty much from the beginning about, the thrift savings plans and investing your money, taking care of your money. Not that there was a lot of great education out there for people, but it was talked about a lot. The seed gets planted, I think, a little bit, for a lot of people at 17, 18, 19 years old, which for our civilian counterparts, I don't know if or when, that seed of investing your money gets talked about.
And that must be an Air Force thing. I didn't know anything about that for a long time.
Yeah,
I think someone talked to me about this once, but I don't know anything about it. I'm putting money in it, but I don't know what that's going to do.
Yeah, maybe it was just my unique situation, but I know I had people around me that they couldn't articulate exactly why or what it's going to do, or they were just like, look, you got this thrift savings plan, like you need to put money into it, put this back, live within your means. It was that kind of thing. So maybe it was just my particular situation in the Air Force, but I think, for some people, they do get that kind of counseling and they think about it. And I've met some people that, they took it to the extreme and invested the max, whatever they could, and, lived within their means, lived in the dorms longer than they needed to, or, they could have moved out or whatnot. So there's some sacrifices people can make. So, but that's a lot of good stuff. So people really need to get over there. I mean, I consider myself my website a resource for things, but you got me beat on that. A lot of resources into personal finance and real estate stuff. So everybody needs to make sure you go follow Dave over there and see what you're doing, what he's doing, and get in the group and look at all that information. But I want to, for the rest of the questions here, kind of shift this to the single family, to the veteran buying a home using their VA loan. Yeah. What do you think veterans need to know about using their VA loan and using those benefits?
I think the first thing is that the VA loan is the most powerful mortgage product out there. And that if you're being told that somebody's not going to accept a VA loan, or that it's not useful, or that you shouldn't use it, your agent and lenders suck. So I hear all the time in my Facebook group, well, that doesn't work in my market because it's hot. Well, we helped probably $40 million worth of homes get purchased last year, and the vast majority of those were in San Diego, the DC metro area, and Hawaii, actually. You can't tell me that it's harder to buy a house in most places than it is in San Diego or Hawaii right now. So, it's like,
wouldn't surprise me.
Yeah. And so it's like, man, if your agent's telling you no one's going to accept the offers because they don't know how to sell the VA loan, and if your lender's telling you that they're not going to be able to close, then find another lender, because, there are companies out there who, even in 2021, 2022, are able to guarantee like a 17 to 21 day close. I mean, cross country in San Diego, there's a couple lenders who will guarantee a 17-day close and even stake like per diem behind it if they don't close on time. And so it can be a very powerful product. It's just misunderstood. So I just caution that like when you start hearing these inklings that like it's useless or you can't use it in this market or whatever, like it's probably that your agent and lender aren't as well versed as you would like them to be in that specific product.
And the thing I've noticed is, because I would totally agree with that, there is a lot of misconceptions. And it's not that difficult. Like there's, and it's not really
like
that
word
much
of mouth crap that.
Yeah, and it's not that different than going with a rural development or an FHA loan. You know, you just have the extra benefits of no PMI. Is it 100% down? If you're disabled, you know, no funding fee. Like there's obviously things that make it way better than those other options. But in terms of closing window, inspections, you know, property, you know, condition, things like that, it's very competitive with those.
And dollar for dollar, the funding fee is nothing compared to MIP or PMI. So if you're paying less than 20% down, the funding fee is cheaper. And if you're paying 20% down just to avoid the funding fee, I would call you a nincompoop, because if you just took that 20% and stuck it in an index fund and paid the funding fee, your ROI 30 years from now on that 20% that you invested at 7% average annual return would just like below the, like you would have saved, you know, on the high end, what, 3.6% for like a repeat use of the funding fee. You save a couple thousand. I think it's on the low end, it's like $2,300 for every 100K borrowed. On the high end, it's like $3,600 for every
that sounds about right. Yeah.
100K borrowed. So, okay. So let's say you're buying a $200,000 house. So at the worst case scenario, that's like $7,200 in this funding fee. Well, okay, if you had taken the 40K down and stuck it in an index fund, you'd probably earn that amount in like 1 or 2 years. And so it's you know, it's a numbers thing. Like people don't like it because it's a fee, but you know, every mortgage has an origination fee. And the other big one is appraisals, right? For some reason, people think that the VA appraisals come in low. And I won't even say in my experience, in the data that I have seen from national mortgage companies, that's wrong. And it's also, the other major difference is, and you're an agent, so you can vouch for this, but if you get a low appraisal with a conventional loan and you say, that's crap, we want to fight it, you have to file with that appraiser and send them other comps and say, hey, we think you messed this up. And their ego is going to get in the way because they're like, why does this guy think he's better than I am at this job? That becoming an appraiser is not easy, right? So
yeah, those are not easy conversations to have with an appraiser either when you're challenging their opinions.
It almost never goes well. Well, with the VA appraisal system, if you want to combat that appraisal, it doesn't go to the appraiser, it goes to the VA. So some person who has nothing to do with the loan or the appraisal is going to look at it and go, yeah, okay, boop. And they don't care because there's no ego involved at all. And they can do I forget what it's called, like a special use or a rushed, or there's a way to essentially like be like, hey, jerks, this guy's not going to have a house if you don't say yes, that you can like nudge. And I'm not necessarily saying that I recommend that, because you shouldn't ever try to buy a house for more than it's actually worth. But if you think it appraises
risks, I said it comes with a few risks.
Yeah. So, I mean, obviously, you know, don't dig yourself a hole, but, I mean, it's just, people think that the VA loan is this terrible thing. And it's like, you've been lied to, or your agent lender doesn't understand it. And they're giving you the easy out, which is go conventional. I know how to do that.
Yeah. I think it's easier on them, you know, and there's some bad lenders out there that are just going to do whatever's easiest for them because they care about the numbers. They don't care about the service. But the appraisal thing, in my experience, I've never seen it. I've never seen it come lower because the appraisers they're bound ethically and with license law to go out and appraise it for fair market value. The only thing they have to look at differently is, does it fit all of the standards from the VA and the underwriting or overlays and stuff like that, but the actual value of the home is just based off comparables. Absolutely. You should have the same value, whether it's conventional, FHA, rural development, VA, doesn't matter. It should come back if you had 10 appraisers go look at it, it should come back roughly about the same for each one of them.
Yeah.
There should be no differences.
I guess the only other, like, there's so many misconceptions, but probably the other two big ones are, I guess three. One, you can use the VA loan more than once. If someone's telling you that you can't, they're an idiot. My first property, I used an FHA loan because my lender told me you could only use the VA loan once. Don't waste it on this small property. So that was wrong. Two, there's no limit for your first time purchase. As long as your debt to income and personal finances qualify, you can buy a multi-million-dollar property, zero down, with the first time use. And then three, and this is just more of a general thing. If a lender's telling you they can't do something, make sure it's not an overlay, right? So it very well may be a lender, like that specific lender can't do it. So prime example, the VA doesn't have a minimum credit score. If a lender says the VA's minimum credit score is 700, well, no, that's the lender's minimum. Like, they don't want to go below that. It's not
that's
the VA.
123 bank. That's their minimum. The bank down the street, theirs could be 500 or 550 or 600, whatever. Yeah,
there's somebody who can do almost anything you want. And so another common one is if you buy a fourplex, the benefit is you can qualify for a much higher mortgage because you can use 75% of what the rent should be towards your debt to income. So you have a higher income, so you can qualify for more property. And a lot of lenders will say, oh, well, you don't have landlord experience, so we can't use that money. Well, that's not what the actual guidelines say. The guideline says that you have to have a reasonable chance of succeeding as a landlord. It doesn't say you have to have experience. So that's an overlay. So either you tell them, hey, well, I'm going to hire a property manager, and that's usually okay for most lenders, or you just find another lender because that's not actually a thing. So there's so many things that are.
Hire a property manager. I was just thinking that right before you said it. I'm like, that's always the easy answer. Well, I'm gonna pay a licensed property manager.
Yeah. So you got to have a good lender, because if you don't have a good lender, they're not going to tell you how to make all this work. And a really good lender will call the listing agent when your offer is submitted and walk them through, like, I will close this fast, blah, 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 blah. And that's how you get your offer accepted.
That's a good point. Especially in this market where things are, just flying off the shelf faster than you can put it on, that it's difficult for buyers in this market. It has been for about a year and a half, and you got to think outside the box a little bit. And if it helps, it helps. So that's some good ones. And the only thing I can think of that I've heard of, I haven't seen it personally, is some institutions charging people for them to get their certificate of eligibility. And it's like, as long as you have your e-benefits login, you can find it in about 30 seconds. Matter of fact, I will put together a guide, and I will link that guide in the show notes on this. It is so easy to get, and lenders should be getting it for you for free. And it really should take them like all of 30 seconds to get that for you.
I was going to say, I used to tell people, if your lender tells you that you have to go get it, then go find another lender, because they're too lazy. It's such an easy process that any lender who cares about customer service should be able to be like, hang on a sec, here you go. Like,
I'll be back on the phone in 30 to 45 seconds. It shouldn't take that long. I know when I refinanced my house a couple years ago, I pulled mine just because I was in e-benefits anyway. I'm like, oh, cool, pull it down, boom, send it off to my lender of choice that but yeah, they for sure, you definitely should not be charged for that. That's ridiculous. And like I said, I haven't seen it personally, but I've heard the horror stories, and it's like this should be red flag number one if you don't have other red flags that have popped up with that lender by that point. But
yeah, I think that's one of the reasons that a lot of these big box lenders are just not worth going through, right? And I'm not going to talk smack about any of these major lenders specifically, but I'm going to at least give examples of ones that I'm not a huge fan of, like Navy Fed, Veterans United, USA, and I'm not a huge fan just because they've gotten so big that there's a lot of unnecessary fees or delays in closing or things. Like, they can be great at times, but because they're so, and it's not just those ones. Those are just like the common ones I see people go for, but like big lenders, a lot of times it's like they don't have like they don't necessarily have specialists. They've probably got additional fees baked in because they're so big, and they're all about the profit. And so it's like, man, I like to find, I don't know, either somebody who specializes in the VA loan or like local lenders or brokers a lot of times, because it's kind of weird. Like every mortgage company has a couple guys who are really awesome at the VA loan, but not every mortgage company has, like, there's no mortgage company where everybody's really good at the VA loan. So you just got to find those pockets of people who really took it on themselves to understand the VA loan.
Absolutely. I think that there's pros and cons at all different levels.
Yeah.
Your local small town bank, well, you're probably going to be able to get that person on the phone. You call, they'll probably answer. But they may not be an expert. They may not do a ton of volume in that. They may have a good feel. They may not. The big banks, you might have more communication issues with them. You really have to check the fees. I know where I'm at. I'm a couple hours south of Chicago. I've had some people, not necessarily VA loan over the years, but different loan types go through, large institutions that like to advertise on television. And you really have to watch those fees. If closing costs are $1,500 to $2,000 in my area, it's quite a shock to somebody when they get quoted like $6,000 or $7,000 in closing costs. And it's like, well, I don't know what they are there, but that's not how we roll around here. Like, and I don't know about you, but I'd be pissed if I lost $5 on the street. Definitely don't charge me $5,000 or $6,000 more for some closing costs. Like, I'm not going to be a happy camper, So you gotta call around. And I also tell people a lot of times the rates and a lot of the terms aren't going to vary. No, they will vary, but they won't vary drastically. You really need to find the bank that has the expert that you need and somebody that you can communicate with, in the way that works for you and that you connect with. Because let's just face it, there's some people in this world you're just not going to like from day one for whatever reason. You're not going to connect with them. You're going to think of them as an asshole or they're just going to be rude to you, whatever, like that's important going through this process. You want somebody that's going to treat you right, communicate with you, and be able to get it done. So that's some important stuff. But there's a lot of misconceptions, but there's also a lot of issues that affect people. Credit is one. So it's probably the biggest one I see. Any advice for people on the credit side of things and how they can overcome credit issues?
Yeah, I mean, it really depends on your history, right? If it's because of non-payment and stuff, you're going to have to go and dispute some things, and you're probably better off actually talking to like a credit repair company. If it's just that like it could be a lot of things, like it could be credit utilization, it could be, whatever. And so if it's credit utilization, and let's say you've got a credit card with $3,000 limit and you owe $2,000 on it, like you could, as long as you aren't going to just go blow the money, you could simply double or triple your limit, and then now your utilization looks a lot better, and that'll bounce your score up. So it's really just all about how much money you're actually spending on those credit cards, and then if you're making your payments on time. I mean, it's unfortunately credit is kind of a slow game. It seems to fix.
It's fast to ruin it, but
it's fast to ruin it. Yeah, I took 110-point hit 2 months ago because I'm getting it disputed. It'll be gone probably in the next month or two. But I had a credit card company that I had paid the balance off, and I guess they had charged like an insufficient fund fee or something. Something went through. It was a $29 fee that they added to the bill, and I didn't know. I don't use that credit card ever. I mean, I hadn't used it in 6 months, and I had moved from where I had lived in California, and I had told them, and I changed all my billing addresses. Well, I don't know. They were sending the $29 notice to my old address in California. And so whatever the stupid fee was that they had for $29 went delinquent for like 3 months because I had no idea, until my credit plummets. And I'm like, what in the world? And I go and look, and sure enough, it's this like 100 and, the fee had like quadrupled over the last 3 or 4 months, but it's like, whatever. So I called them. I'm like, what do I need to do to this? They're like, oh, you got to do blah, blah, blah. So I got a company. I'm disputing it, basically saying like, hey, knuckleheads, like you never contacted me via phone and you sent letters to an address I haven't lived in since I got out of the Marine Corps in October, but I actually haven't lived there since May. And I changed the billing address. It shows it here. Like, you know, so
One
I mean,
hand's not talking to the other, right?
yeah. And so it definitely can drop real quick. Which is frustrating because I'm like, now, you know, my credit card, because of that, my credit card limits shrunk down a little bit. So now my utilization looks high, which makes my score go down even more. So I'm like, oh, all this stuff will self-correct as soon as these knuckleheads take this, you know, delinquency off my record. This is the first time I've ever been hit with delinquency. And I'm like, over $29. Thanks, guys.
Yeah, they don't care. Even if it was a penny, they'd come right after you. They don't discriminate when it comes to that. Like, they're going after everybody. But the credit stuff, I mean, I see people all over the place with credit issues, you know, and I see some people like, well, I pay cash for everything. I don't have a credit score. Like, well, it's easier to, you know, sometimes to go from zero to something than it is to go from ruined and bad track record to fixing your credit. But the utilization, you know, another thing you could do, like you mentioned, if you 3,000 and you got, you know, 2,000 on it. If you got $500 laying around that you can spend, then drop the $500 on it. Drop $500, $600, $700 on it, and get that below 50%.
Yep.
I think the magic number is closer to 30%, but you know, every 10% or so you drop it, it should see some sort of an impact. But it's slow. Yep. If you paid it today and they don't report for another 3 weeks, you know, you might be another 3 weeks at least, if not a month and a half, before you see any kind of increase just on simple little tweaks. So, you know, I know I've seen people like that. It's like, yeah, well, I'm getting there slowly. I paid this off, I paid that off, and then I fixed this and then disputed that. And it's, you know, it's like, oh, now we're to 500. Now we're 510. 3 months later, we're 520, you know, and it's like, it's a slow, painful process. It really is. Yeah. And sometimes those things, like you said, your $29 fee, it's not your fault. It's their screw up. And it you know, ruins things for people. So
yeah, it's definitely frustrating. It's almost comical too, because it's like, bro, I got like almost $5 million in mortgages, and you can tank my credit over $29. Like, what gives? But
well, I did hear the other day. I don't know if you've heard this. The credit reporting agencies are going to make some changes in June, I believe, of this year, where if you've got, I think it's a medical collection on your credit history that you've paid off, then they'll wipe that out, or it'll be taken off of your credit instead of showing for 6 months or a year or whatever it is, or whatever, however long it's on there. I'm not a credit expert, but I do know that wiping stuff off of credit reports when it comes to collections will help people. It'll help a lot of people, especially medical collections. And I think there was a couple of other things in there. So those people who do have some issues with their credit really need to take a look at this and see if it's something that might affect them. You never know. You might see your 500 credit score jump to 550 because of it, or 600, or who knows. So, you know, especially if you're out there on the fence about buying, maybe my credit's not good enough. Who knows? This summer it might change for you. Might change drastically. So, any other thoughts on the VA loan that people should know?
No, I mean, I would just say that I think the one thing I caution people are always scared if you go zero down that there's a lot of risk with the mortgage. I would rather go zero down and keep 20% in my bank account for emergencies than go 20% down and have nothing in my bank account for emergencies. So don't get so wrapped up around the fact that you're going to be 100% leveraged. It's more about how much money you have in reserve in case something goes wrong.
And even if you've got some money sitting in reserve, you could still take that 20% or 10%, whatever, and that could be new flooring, paint, some things you can do that can build you some instant equity in the property. Yep. Because if you buy right, sometimes you can buy some properties that you can get some pretty much instant equity out of. If you buy something that needs a little bit of work. This day and age, not everybody's willing to do that though. Some people want move-in ready. I call it the HGTV curse. Everybody wants what you got on TV. Some people are willing to take on those houses that are still stuck in the 70s with the shag carpet and the paneling walls and willing to do something about it.
I'll take that any day over some of the crap that I buy.
You know what? As would I. Actually, I would love to buy something still stuck in the 50s.
Yeah.
Have some modern fridge and all that stuff, but some of the character that you get in some of those things. So, but Dave, I appreciate you coming on here and dropping some knowledge on what you do and your thoughts and opinions. So I always love talking real estate. For all the listeners and viewers, make sure you go check out his website, check out the podcast, like, subscribe, follow both of us. That's important to sharing what we do. So I appreciate you being here.
No, Keith, I appreciate you. Thanks for having me, brother.
Yep, no problem. Now you can get back to work.
That's exactly right. We got about 75, 80% of the siding done today. So,
well, I certainly hope they don't just say the last 20% is for you.
Yeah, we'll see.
All right, brother. You take it easy.
Thanks, brother. You too.